This week, we have seen the US raise their interest rates, with Mexico, Chile, and Hong Kong all following suit. Joining me is founder and CEO of Wave Strategy Advisors. Ashish, Japan kept interest rates on hold today, and the Bank of Japan has extended its asset purchasing program. How has the yen reacted to this?
Overall, the reaction to the Fed meeting in US, it was very much discounted. So let me start with telling something about the US raise in interest rates. So this has been discounted for quite some time, and it was expected why finally US might be coming out of the slowdown. That's why we can see the rally across US markets and other markets. Today we saw that Bank of Japan has extended its asset purchasing program, which is in a way I would suggest that it's not going to have a significant impact because this program has been ongoing for quite some time, and it was again discounted by the prices that they might be extending it because Japanese economy has not fairly done the way it was expected to perform. And from Japanese yen perspective, it has been depreciating for quite some time. From the mid of 2014, Japanese yen has already moved from around 100 levels to 125. And so I think the overall trend for yen is going to be depreciating even further against dollar eventually. What will happen is we can see some range-bound movement for some time. Talking from the technical analysis perspective, I think 125 is going to act as a very key resistance for yen, with a very, very important crucial support coming near 118 levels against USD. So it will be only on the break of either of these levels we can expect a very good trending move to emerge again in yen. And 125 should be taken out on upside, I suppose. Japanese yen should again continue to depreciate in the near future.
The dollar has been boosted to 2-week highs against a basket of major currencies. Were you expecting such a bull run?
So the dollar movement has been started in the mid of 2014. If you look at dollar index, it was trading around 79 and it touched the mark of 100 just a few weeks back. So this move, the up move has started even before the change in the interest rates. I think we are already in a very strong bull trend for US dollar, which should continue at least over the next few months as well. And the key resistance on upside in USD is going to be around 101. If it manages to take out 101, then we can see dollar rally to continue for many months to come. The very important support for USD is now going to be around 93 against the basket of currencies, and I think this support is going to remain intact. And with the Fed raising the interest rate, the demand for dollar is definitely going to increase more now, and slowly and steadily there is a possibility money might come out from the emerging markets and back to US. So there is a lot of probabilities which has opened up, but looking at the technical perspective, there is a higher chance that US dollar might continue to rise in near future.
Taking a look at Latin America, most currencies have remained steady following the interest rate increases of their own. Chile's interest rate has increased to 3.5%, and Mexico has hiked rates to 3.25%. Argentinian's peso has significantly slid this week. Has such a significant depreciation been a surprise to the markets?
The fall in Argentina peso is definitely a very, very steep movement because this is something which was not expected, and we can clearly see such kind of sharp movement can result into an adverse impact on any economy. So that remains a concern. Nevertheless, the Argentina stock index has continued to move in a decent uptrend, and it has not reacted very sharply with respect to the currency. So the key area to look at is currency reaction. It has still not happened in the markets, and it's going to take some time while sharp slide is going to impact the economy. So that's going to be a concern for sure, but I think it's going to be only in few months' time that will start showing some kind of an impact on the economy. The other emerging markets which might be concerning is going to be China. We have already seen a lot of commodity pressure across the Chinese economy, and that is because of the Chinese economy slowdown. We are concerned about if the dollar keeps rising, then that might put pressure on the commodity stocks. That is going to definitely impact the resource-producing countries like China and also to some extent Australia. So these countries are going to be definitely impacted. On the other hand, India, I suppose, is going to be a little insulated with this step because India is relying a lot on oil imports, and there has been sharp depreciation in the prices of crude oil, so which is going to be eventually resulting into a positive view for India at least. So it's going to be a mixed reaction, I would say, with the dollar rallying. So a few countries or continents which are actually benefiting with the fall in commodity prices are going to perform well, whereas the resource-producing continents and countries are probably going to be in trouble.
Well, Ashish, thank you for your insights. Bringing you the week ahead on Monday is Louise Macaulay, so be sure to click back. Goodbye for now.